Okay, so the first thing I want to cover is I started calling this the perfect short signal in the regression line crossover, and then it turned out actually to be a pretty good trade on the short side. But I wanted to illustrate why I thought it was a good signal, not that it predicts the trade, but it just suggests that if it follows through in a normal way, it could be a very nice trade. That's what worked out. Okay, so this is chart number 1 in the series. And the question I posed in the chat room was, why is this a perfect shorting opportunity here in the blue circle? Let me, I should say, let me introduce the chart notation here, because there's a new kind of version or a new indicator on there. As you know, I've been experimenting with turning off the candlesticks, and I've been using the 2-period exponential moving average. As a way to screen out some of the noise on the candlesticks. Ali reminded me of his idea that, well, what about using a short-term, very short-term Bollinger Band as a way to describe normal price action? That made a lot of sense to me. So I just started experimenting with a 2-period Bollinger Band. So we actually, and that's in the orange. And what I've done is I've put the price as a thin white line. And so in this period, this little section here in the middle, you can actually see price traveling from one side of the Bollinger Band to the other as a thin white line until it leaves the bound to normal, and then it comes back. Well, what that does to my little artistic mind is it creates almost a 3D effect that makes that orange 2-period Bollinger Band look like a tape that is floating above the river, almost like a Chinese serpent. And I find it very attractive and easy to see. So we were calling that the tapeworm template as I was playing around with this. I really like what it does. I find it visually appealing. It gives you about the same kind of area that if you were to just make a channel out of the real bodies of the candlesticks, you'd probably see about the same thing. But for right now, I actually like the way it looks. And when you have it on short-term time settings, it makes the price look like it's fluttering in the breeze, so kind of attractive. So what we have now is we're looking at a 3-minute chart with price being indicated by the 2-period Bollinger Band in the orange. You can see the dotted line is the mean, and then the little white line is price. We have the usual 30-period regression line is the black line. A 10-period regression line is the blue line. And the river in the middle is this 30-period Bollinger Band plus or minus 1 standard deviation, with the red line highlighted as the Bollinger Band mean. And then these little dashed series of purple lines represents the volume weighted average price. And you can see the gap from Thursday's close until Friday's open. Okay, so the quiz was, right here in this moment, why is this a perfect shorting opportunity? And the guys in the chat room, of course, hit it out of the park, and what they said was, the trend for the day is down, as you can see by the 30-period regression line is clearly heading down and is still south of the river. The river itself has rolled over. The volume-weighted average price is declining. The 10-period moving average, or the slope of the 10-period regression line, after this regression line crossover and has bounced up, failed to get to the Bollinger Band mean. And that's really important. When we see a regression line crossover outside of the river, the expected target is a regression to the mean, in this case, which is the red line. But here what we had was price goes into the river, so it's a regression line, but then rolls over before it even gets to the red line. And I treat that as significant. That's an automatic short for me. We could also wait for it to get below 1642 and make a new low of the day, but the difference between about 1662 and 1642 is about half an hour, and I'm ready to, I don't want to wait that long for more information because I'm already convinced this is a reasonable short opportunity with a stop above the Bollinger Band mean, for example. I know that if price breaks below yesterday's low over here at about probably 1630, then it will drop like a rock, and it would drop like a rock below 1640 and then through 1630. So if I'm interested in getting into position ahead of those potential catastrophes for price, then I need to be getting into this position now. And the fact that it's rolling over short of the Bollinger Band mean makes it very attractive to me. So those are the reasons I consider that to be a perfect shorting opportunity. Part 2 of that quiz was, how much further could it go south if it turns out to violate 1642? And how would we estimate that? And the answer was, we can take the range stat of UVXY, subtract it from the high of the day up here around 1740, and then drop that down, and then see that would be the maximum reasonable normal excursion on the downside. We wouldn't be surprised if it fell that far. And in UVXY, that turned out to be about another buck. And so with about a 30-cent initial stop, there's still a comfortable 3-to-1 reward to risk available in this. So that makes it a legitimate short in my view. Okay, any questions on that one before I proceed? Let me just go ahead on to the next one. All right, chart number 2 in the chat room then was, I then started to say, everything that I just said, I now want to try to put to a specific point on the screen. And to trade this particular strategy, you should be looking at the following kinds of pieces of information. I've drawn 1, 2, 3 purple lines, a green line, 3 red lines, and then a whole bunch of blue circles. And every one of those has a specific meaning for me. And so to trade this particular technique, I believe, you should be able to explain what's going on inside each blue circle and with each colored line. So I'll just, in the interest of time, I'll just lecture my way through this. This first red line I see touches back to an important support level from yesterday. If price falls below this thick red line, then it really is going to drop like a rock. So I want to be in the position before that happens so that I get swept into that position. Or maybe that's where I put a second one on. The second red line represents a failure at the low of the day, and so if it fails there, I believe it fails to the next red line very quickly. If it fails to fail there, then that becomes a potential support level on the downside. This last little red line here is right at the edge of the river, which is a place that you could decide to get short to, that upon price leaving the river, and with their 30-period regression line short of the river, that's a time when I like to front run the short at about, say, 1645. If I go up 30 cents from that, 1675-ish would be up here around the green line, just above the Bollinger Band mean. That would also be a place where I'd be willing to go long because we had a regression line crossover inside this circle, which is why that circle's there. We had a move towards the Bollinger Band mean, a hesitation. Then if it were to go above this green line and never get out of the river, but go through the green line, I'd be willing to get in. My price targets on the upside would be at around 1695 at this purple line, which is where price would leave the river. That's another place you could get long at. I see this hesitation and VWAP up in here at 1720 as a price target, and then a test a high of the day at about 1750. So that's the price ladder on the upside. Let's take a look at the blue circles now. We had a price and the Bollinger Band and the VWAP all cross each other and then enter the river going down. So we had a high, it fought it out here. We had the price, or the 30-period regression line rolling over, and then everything else joined the river. To me, that's a good time to get short as well. The next one is we have the price and the 10-period regression line gets to the Bollinger Band mean and never looks, it doesn't even hesitate for a second. It's in free fall to the far side of the river where price and the 10-period regression line fail outside of the river. That's another good place to get short at about, that looks like about 1685 you could be short. And look, price never even got back into the river until down here around 1645. So that's a 1-hour move if you can, if you're adept to get short here. If you didn't get short here, you might have waited for confirmation of the 30-period regression line crashing through the VWAP and the Bollinger Band mean. Then later on, you have the beginning of trending behavior right here in this blue circle, where price, the 30-period, and the 10-period regression line have all rolled over and are south of the river and heading down, just as the Bollinger Band mean is rolling over and leaving the VWAP. That's another excellent short opportunity because it rejected the edge of the river and started heading south, and that's an R at a minimum. In this blue line, you have a clear rolling over of the 30-period regression line, or the 30-period Bollinger Band mean, starting to leave the VWAP behind. In this one, you have clear separation, and that lines up with this runaway downside move. There was a brief blip up and then another failure to the downside, down to this price target here to make the new low of the day. You also have this as a regression line. So anywhere you were short inside this excursion to the downside, you've got to be thinking about cashing your profits here and being prepared to see what happens after the regression line crossover. You see now quickly, price and the 10 have moved into the river as the 30-period has rolled over. And now what we had was, instead of getting to the Bollinger Band mean, which is our target after this regression line crossover, we see failure here. And because we haven't gone a full range stat yet and can still frame 3 to 1, that makes this a perfect regression line crossover. So what we have is a series of little indicators going through time that give us additional confirmation about what's going on inside the market and allows us to start taking a position about the directionality of the moves. So that's why I say you should be able to explain what is going on in each one of these blue circles and within inside each of, or what each of the colored lines represent. Okay, moving on. Chart number 2, or 3. This forwards about 30 minutes or so in time, I guess. And this blue line, or this blue circle right here, was where quiz number 1 was posed. And what we had was it came out of the river, hesitated the regression line, rebounded to the edge of the river, and then failed again. So this is now if you got short in here, and you may or this may or may not have hit your stop. My stop was at 1675. It didn't get hit. But even when it fails to leave the river and rolls over again, now what I want you to notice in this area is an additional shorting opportunity. Now what you have is the river has gotten very narrow. Price has failed once and then twice and then 3 times to leave the river, and is now everything is crossed the Bollinger Band mean once more. You have price leaving the river. You have the 30-period regression line rolling over. You have the 10-period regression line rolling over. You still have a downward slope in the Bollinger Band mean. You have the narrow river right here. This is, you can consider that to be a breakout from sideways quiet channel, or just a continuation of this downside move. This is another brilliant short side opportunity. And what I know is, for sure, I want to be short. If it gets below 1640, that would be the low of the day. It's going to drop like a rock, as we saw in the previous chart, based on those other red lines. So I get short here. If I'm not already short, I get short here at 1645 as it's leaving the river I'm not going to wait for it to break a new low because I don't want to get a bad fill if it turns out to make a mad rush to the downside. So the same kind of logic that we used in quiz number 1, we can think about quiz number 2. We have this additional price information here, which says that for about a 30-minute period, it failed to get out of the river, failed to go to the VWAP. There's still more room to the downside, and we can play that as a short. Next chart. Now I'm going to push this over to the right, and I'm going to engage in something I call the continuous estimate process, continually framing. Now what I've done is I've zoomed this out just a little bit, and now we're inside this second quiz circle right here. And like I said, there's no doubt in my mind I want to be short, not later than price violating the thick red line, which was the low of the day. So if it gets below 1640, I definitely want to be short. It's not even thinking twice. I now take a look at this triangle that's being formed by, from the top of the regression line or the high of the day, however you want to draw that, and just draw that down in this about parallel to the path that this Bollinger Band mean was forming. And then I project forward into that. That looks to me like it's coming to a crescendo. It's, we had some big fail in the morning, and then this sideways quiet channel developing, and now the Bollinger Band width is getting narrow. Somewhere between price right now and where these two lines meet, in other words, in this yellow box, which represents about 30 minutes, I think we're going to get a sharp price move to the downside or the upside. I think it's going to go down only because the day has been down, and I know where my price trigger is, not later than crossing that red line. But if that doesn't work and it breaks out to the upside, well, based on this regression line crossover in here, my first target is going to be this price at about 1687. A breakout from here has to get to here. The VWAP to me is the first obvious target. Now, if it gets through 1687, then as far as it fell to the downside, it could go that far above the VWAP, which would simply take it back up to the high of the day, and which is why on the previous chart or so, I drew that as a retest. That looks to me to be the trading channel. And now what I've done is I've created a trade frame that allows me to have triggers and rewards and risks assessed in both directions. And for me, the amount of risk is really in this blue circle. It's the width of the river. Which way it looks like it's going to break out, so I'm going to just get short here because price is breaking out on the downside now, but I'm going to have a stop above here, 20 cents above that at 1660 or 1665. I would reverse and go long with an idea that it's going to get to the purple VWAP and then go retest the high of the day. So this process of continuously updating is called the continuous estimate process by military guys. Okay. So continuing to frame and reframe, trying to figure out the story of the day as we go. All right, so then what happens is, right after that, in fact, so I'm short here at 1645, and then it crashes south very quickly in a matter of about 3 minutes. It goes from 1645 down to as low as 1615. So 30 cents, that's an R move already. And so if I wait for that price to cross the red line and then try to chase this and get a fill, chances are I'm not going to be happy with my fill. And that's why I like to get short inside the last hesitation before the crash, if you will. Am I wrong on that sometimes? Yeah, wrong lots of times. But tiny little losses. But when it works, it pays off in a big way. And so now what I would say is, in terms of my emotional state, as soon as it crosses that red line and crashes, all my interest or the excitement or the anxiety or the nervous energy just kind of disappears because it voted sharply southward. And so it's not even interesting to me anymore, since I now only have one more decision to make, and that is when to exit. So Miguel asked the very perfect question, which was my next question in the script, which is, how do I make this more interesting now? And the answer is, I've got to start stalking the exit in the same way that I stock the entry. But this sort of has resolved the tension. What you can see here is a sideways quiet channel, and now a sharp violation to the south, and I'm already into the trade with an R in hand, and I've got an R from this previous one as well. So I've got markets money to play with, which is a nice feeling to be in here right about now. In terms of, we're going to zoom back here a little bit and just take a look at my decision-making screen. And what I have is I've got this reduced ticker list over here, which is sorted by the percent gains and losses for the day so far on a handful of symbols that I had on my short list for trading. And now what I've got is right in here, this is the symbol I was trading. That's UVXY, that's the double inverse VIX. Below that I have TNA, which is a leverage fund, a 3 times Russell small cap. And what I've got there is these often move, as you can see, in opposition to each other. And these are both on 3-minute charts using that tapeworm, or the top one is the tapeworm, because I'm experimenting with that as a replacement for the candles. And then this one shows the regular RLCO lens, but with the candles. So, and then I have my SPY right here, and I have this on 1 minute. I was using the tapeworm because I want to get a little front run on and seeing what the market is doing. So on this move right here, which is 1.1R down into the red circle in UVXY, that time frame from when I got short here down into here is this yellow shaded area. When you look at it on a 1 minute chart, this is what that same move looks like inside SPY on 1 minute charts. A decisive move out of the sideways quiet channel on the 1 minute charts. So that's pretty noisy in there. It's hard to trade that directly. But what you can see is that the breakout on the 3 minutes was a very significant sharp move on the S&P. And at the same time, you had this sharp upward spike in TNA out of the sideways quiet channel. And now, as price is slowing down here in the short, you can already see price degrading in TNA in the same way you can see price pulling back inside SPY. And that's enough for me to cash my 1.1R because I like getting paid. Sue me. Okay. Now, after that period of hesitation, we had price recover a little bit. We had a regression line crossover. Price and the Bollinger Band got just to the edge of the river and then started to fail again. So I get short once more at 1610. Because what did we have here? We had a failure at the Bollinger Band mean. We had a failure at the river, and another failure before the Bollinger Band mean. We had a failure at the edge of the river. It's getting worse, not better. And my note here is, notice the information contribution of the 2 regression lines, the river and the VWAP. Each one of them is given important information here. The VWAP is declining and starting to fail faster. There are guys starting to put volume on these subsequent failures. This is a market that wants to go south. The VWAP tells me that. The 10-period regression line is outside of the river and failing, has already rolled over. It barely got to the mean here. This time it didn't even get to the river and failed. The 30-period, this was a big sell-off in the morning, got flat, hit the Bollinger Band mean, and failed. Man, that is a really powerful signal. Because what you had was this move from the regression line crossing the Bollinger Band mean all the way back here. I consider that to be leg 1, and now this is the beginning of leg 2. And I think leg 2 can be as big as leg 1, which is a move from 1740 down to 1640. That's a 6% move, and there's another 6% move that can go from here at about 1650 down to 15. Well, there it is. There's another 6% move. That's a 12% move. That's tradable. So that look at all the information content that's in there. This next one is just kind of for fun. I have often said at seminars that if we could just get the charts rotated 90 degrees, you would get away from your long side, short side bias. Now, this thick black line in the middle, that's where the VWAP and the Bollinger Band mean parted company right here. I just drew that as a sort of a fair value, and this is where, in this blue circle, is where the VWAP and the Bollinger Band mean came together early. They rode together in tandem for a while, and then the Bollinger Band mean began to accelerate to the right and get into the passing lane. Meanwhile, you had the 30-period regression line, the 10-period regression line, all giving you these early warnings that the market was heading south. Until this time out here, where it's absolutely obvious after a 12% move down. Look how far to the right it has moved. 12% is a pretty incredible move for that symbol. It's up around just slightly above average for UVXY, which is why I like to trade it. So this is really just the previous part. What you notice is, or at least what I notice, is psychologically, when I rotate these 90 degrees, I don't have a directional bias in here. I'm not trying to make the market go up. I can see which side of the which side of the black line that things are on. So just a change of perspective can often give you some deep insights. Now what we have, fast forward here, is I end up covering at 1575, which turns out to be awesome. And shortly thereafter, you get this regression line crossover after this nice long move. So we had leg 1, and now leg 2 is down here at 1575, a regression line crossover, and now we've got price entering the river at 1590. After the regression line crossover outside of the river, we've got 3 different targets here. The first target is the Bollinger Band mean. I'm not allowed to be surprised if it gets there. It's supposed to get there. Just like it did on these over here. It got to the Bollinger Band mean. The failure to get there this time is what triggered us to want to go south, and this failure triggered us to want to go south again. So the Bollinger Band mean is the first target after a regression line crossover outside of the river. Far side of the river is the second target, and in this case I picked the third target as the VWAP, and then after that the high of the day. What this regression line crossover here says, if you had been short at any time on the previous price move, you have to be covering by this regression line crossover because you've had this much price action going against that previously dominant trend. That trend is over for now. And now we're looking at targets of 1, 2, and 3 on the upside. You already know how to get short on this one again. Hey, failure before the Bollinger Band mean, failure at the far side of the river, all of those things are reasons to get short again, so we know how to do that. But the moves on the upside, these are the places where we're not allowed to be surprised if price gets there. And shortly thereafter, in fact, you can see, almost like clockwork, we've got this move from about 1570 to 1610. That's 1.5 R if you can use 30 cents. Not enough to trade in my view, but I mean, you could try. But the idea being is that that is an absolutely normal move right there. Now the rest of the day, it closed much lower. It made a new low of the day after that, and it failed shortly after this. But that's another, that was turning out to be a third leg down. All right, so that's everything I wanted to cover on that particular case study, and I think of that as the perfect short signal, and not because it actually turned out to be effective, but only that all of that information, in my view, is contained and implied inside this little chart pattern right here, way back on the first slide, and that was that there was still plenty of downside room here based on the range stat, and that we had a lot of signals that suggested it was getting ready to get weak for another leg down. Now, on a good day, you can get this short here, where you had a regression line crossover, failure at the VWAP, and now price and the 10 period, and shortly thereafter the 30 period are all entering the river and going south, fine. I hope you can get that one. Or get it when everything leaves the river here, or when it leaves the river here. But when you get to this position, if you've covered those shorts and you want to get a re-entry, or if you're waiting for that as some kind of confirmation signal because you want to wait till just before lunch, whatever. To me, that was the perfect shorting opportunity, or the perfect shorting signal at that moment, because it had all the information that I needed. I had plenty of information about the day so far, and plus this was a moment when the president started talking nonsense about the economy, and that's never good for price. So that's the story of the perfect short signal on June, I guess that was 8th, yeah, June 8th, 2012. So that's everything I wanted to cover now. It's 8 o'clock and we've been at it for an hour, so thank you for hanging in there. I'll get this thing published and hung on the web there. And you guys take it easy. We'll see you in the chat room tomorrow.